Hello everyone, we got some interesting data yesterday in the US. The ISM manufacturing index came out slightly up from 59.5 previously to 59.9. Sounds like a strong number, but that's about where it was pre-COVID during good economic growth periods. So that is a good number, but don't think it is a spectacular number. And really it's been flat now for 9-10 months and it only had one momentary spike. So certainly a plateauing US economy with a lot of other data still pointing to a weakening US economy. And at the moment, with the various weather challenges facing different parts of the United States as we sort of discuss things today, particularly in the New York region on this particular day, there are other weights on the US economy too that markets so far have managed to ignore, and well they should, because we know they are short-term factors. Something that isn't a short-term factor though remains the Delta surge. We're seeing some and hearing of some very difficult situations in states like Texas and Alabama at the moment. And they're really not good stories. They will weigh on those economies. And going forward, the United States is not free of COVID and this nirvana situation. I'm sorry for using that word too much, overusing the nirvana word. But that really is how many economists and market pundits were painting the picture only sort of 3 or 4 months ago. And we were warning then that that was a big mistake. The Australian situation today, everyone's excited about the biggest trade surplus ever, 12.1 billion. But that trade surplus is really more a function of still weak imports rather than a function of high exports. Of course, the high exports do help. Exports were about 5% above where they were pre-COVID. And we all know that this is the flow-through effect of reasonable commodity prices and very strong demand out of China and elsewhere. The weak spot, though, was really imports. Yes, they were up on the month, but they are still around 8 to 10% lower than they were during the pre-COVID normal economic environment. So we're still operating, bringing into the country at a reduced demand level, which is a warning for the economy. And overall, stocks have tried to rally on that news today, but it hasn't really been working out. I think the rally is again, after a very sharp fall earlier in the day, the rally is again tiring. And I do see the Australian dollar is perhaps starting to hit a bit of a wall here. There may be some follow-through trading in New York tonight, or particularly in Europe, on the back of that trade surplus data. But when you read into the fine print, the import part of that is really a warning sign still that the Australian economy hasn't got back to where it was before. We all know that it's about 1.6% larger than it was pre-COVID. But a lot of that is because Australia had the largest per capita stimulus measures in place in the world without having the same degree of actual COVID distress. Hence the big bounce back. And as we said, and I've gone into this many times, the rolling over the Australian economy, and we're now in recession. But that was a nice number on the day and added, it sort of saved the Australian stock market from continuing to fall further. It did have a big fall today, bouncing back, hasn't recovered all the lost ground. And I'd suggest, as I have been consistently for some time now, that this is probably a consider hedging some investment scenarios situation. So on the currency front, the US dollar is looking like it could start to make a little bit of a push again to the upside. It's not really confirming it as yet. But against the euro and the sterling, there is signs of that pullback in the US dollar stabilizing, starting to turn around again. And if we were to see further evidence of that over the next 24 hours, we'll probably also see a top in the Australian dollar. If you're a day trader in the Australian dollar today, obviously you're hoping that Europe and New York will push the market higher on the same news that you've already managed to get a long position on. And that's probably a reasonable expectation, but I don't think it's a walk away from the table kind of trade, and a watchful eye is good advice in this situation, because if the US dollar starts to strengthen, it won't matter about that strong trade number. And with a lot of people turning long the Australian dollar on the day, it would be vulnerable to some kind of correction. Gold is consolidating nicely. I still see that as a bullish outlook, medium to long term, and this whole period should be seen as one big consolidation period that is going to move higher. Oil, very volatile, but again, I think oil is still a medium to long term sell. In terms of the US stock market, we saw this continuing pattern of stalling out and even starting to look quite heavy during the Asian trading period. In fact, if you're a day trader watching the US futures markets today in Asia, you'd be wondering, is it going to fall a little bit further? Because it seems to be sitting on the supports rather heavily. So there is downside risk there. And if that were to happen, of course, that would add fuel to the fire that's already smouldering with a lot of smoke around the Australian stock market. And in Korea today, we did see inflation come out at 2.6%. That is stable. So I think that's a good result. It's a high number, but it's been around that mark for several months now. And we saw GDP revised higher to up 6%. So a very strong sort of recovery phase still in play there. That's year on year, of course, and a year ago things were pretty bleak, but a good recovery phase still in place there as well. Thank you very much. Clifford Bennett, Chief Economist, ACY Securities.